Inflation steals quietly, interest rates hit you loudly, but neither exists to protect you. Every time prices rise, you are told it is temporary. Every time rates go up, you are told it is necessary. But here is the truth most people never hear. Inflation and interest rates are not enemies. They are tools, and they are used on you. Most people think inflation means prices going up. That is only the symptom. Inflation is the loss of purchasing power. It means your money buys less, even if the number in your bank account stays the same. You work the same hours, you save the same pounds, but food costs more, rent costs more, energy costs more. Your life becomes more expensive without your permission. And here is the critical point. Inflation is not accidental. It is created when governments spend more than they collect. Central banks print or create new money. Credit expands faster than real production. More money chasing the same goods equals higher prices. Who benefits from inflation? Governments. Their debt becomes cheaper in real terms. Asset owners, property, shares, and commodities rise with inflation. Large institutions, they get money first before prices rise. Who loses? Workers paid in wages, savers holding cash, pensioners on fixed incomes. Inflation punishes patience and rewards leverage. When inflation gets too obvious, central banks respond with interest rates. You are told this is to protect the economy. But let us be honest about what higher interest rates actually do. They increase mortgage payments, raise credit card and loan costs, slow business investment, increase unemployment risk. Higher rates do not punish those who caused inflation. They punish those who rely on borrowing to survive. This is important. Large institutions often lock in low, fixed rates, access cheaper capital, hold inflation-protected assets. Ordinary people do not. Interest rates are not a scalpel, they are a hammer. They slow inflation by slowing people. You are told there are only two options, high inflation or high interest rates. But notice what never changes. Wages lag behind prices, savings lose value, debt remains central to the system. No one asks whether the system itself is the problem, because the system depends on debt growth, continuous consumption, ever-expanding credit. If inflation is too high, people complain. If rates are too high, people struggle. Either way, the system continues. This is not a failure, it is how it is designed. Let us be very clear. The winners are governments that inflate away debt, banks that earn interest in all conditions, asset holders who ride inflation upward. The losers are workers paid in fixed wages, savers holding cash, people late to assets and early to debt. Inflation quietly erodes your money, interest rates loudly restrict your freedom, and both are justified as being for your own good. This channel is not here to scare you, it is here to wake you up. You cannot stop inflation, you cannot control interest rates. But you can. Understand how they affect you. Stop relying only on wages and savings. Start thinking in terms of assets and long-term protection. Financial freedom does not come from trusting the system. It comes from understanding it. If inflation and interest rates feel like a trap, that is because they are. But traps only work on people who cannot see them. Understand money. See the system. Take control.